Yields back. The gentleman from Illinois, Mr. Casten, is recognized for 5 minutes.
Thank you. Appreciate you all being here. I want to start a little wonky. There's been some academic discussion sort of linking stablecoins to Eurodollars as something that exists outside of the normal payment system. And Ms. Butler, I just want to start with you. Do you agree that the U.S. correspondent banking system, as it sits right now, has sufficient guardrails to make it difficult for illicit actors to access the global dollar system?
Thank you very much for your question, Congressman. I do believe that the rules that we operate today in the traditional banking services, including corresponding banking, are applying the right safety guards and rules.
Okay, and I agree with you. I raise that because stablecoins, as they're structured right now, do not have that same sort of nexus of control, right? They can hop across the river, if you will. They can be transferred on public blockchain networks. There's no central operator, no entity. Ms. Howes, I think you had alluded to some of this in your testimony, and I wonder if you could just share with us how you think Congress should address that gap in our sanctions and anti-money laundering networks so that stablecoins don't just become a backdoor for the bad actors to get into the U.S. dollar system.
Thank you, Congressman, for the question. I think that the most, you're right, that I started on the earlier answer, but basically the most important provisions, I think, that are necessary are making sure that the issuer and the administrator of the stablecoin is implementing some AML requirements, and especially for sanctions requirements, making sure that we're not facilitating transactions denominated in US dollars to sanctioned jurisdictions and sanctioned wallets, which is happening right now. So making sure that freeze and recovery capabilities are in place, and then making sure that the US dollars are not being made accessible to the greatest threats to this country.
Okay. And Mr. Gwynn, you'd alluded earlier to saying that when some of the algorithmic stablecoins that had broken the buck, if you will, unless I missed it, you didn't mention the fact that the most recent breaking of stablecoins was when SVB and Signature Bank runs happened, and you had a bunch of stablecoins that were sitting there in uninsured deposits. Is it your position that any liquidity that's in cash deposits should be absolutely 100% insured?
So it's interesting. I do think that
I'm just looking for a yes or no because I want to get through a couple things.
I don't know that I have a yes or no to that. I think that one has to be more careful with uninsured deposits. In the SVB had 95% of its deposit uninsured, so it was
if we have liquidity underpinning these things, like stablecoins need to be boring to work. We don't want fractional banking and blow this thing up. And Ms. House, correct me if I'm wrong, dollars deposited in European accounts are not insured by the FDIC, correct? I want to turn now to the fact that we just witnessed the largest cryptocurrency heist in history when North Korean hackers stole $1.5 billion from ByBit. Mr. Cascarilla, I understand, maybe you can just share, what is Paxos' policy for freezing funds that have been used for illicit activity?
So we have a couple different guardrails in place. The first is we have terms and conditions that set forth how we could freeze and then seize funds, which we have done in the past. We also have this overseen by our prudential regulator. When we receive a subpoena from a lawful jurisdiction, we can freeze the funds, and when that's adjudicated, we can seize them. So
does your policy that you will freeze them only if a regulator directs you to, or will you take proactive action to seize them as well if you detect illicit activity?
We will contact a regulator when we've seen illicit activity. An example would be our Pax Gold product. When we saw it moving after the FTX collapse, we contacted our regulator. I think it was the DOJ, actually.
But I just want to understand, because we're all Americans here. If you knew that North Koreans were laundering money to finance their nuclear program and the regulator had not yet said to stop, would you shut it down immediately, or would you wait for someone to call you?
We have these conversations in real time with the regulator, so we would, of course, talk to them and make sure that we were doing it appropriately.
Okay, well, all of us, if we're participating in the banking system or want to participate in the banking system, need to address that. Given the speed at which some of these people go through, particularly, right? Because it's one thing to say we're having real-time conversations, but I mean, these things can hop through in an instant. Running through mixers, running through DeFi protocols, chain hopping. Ms. Howes, does Congress need to consider requirements to, at a minimum, make sure that stablecoin issuers have the technological capabilities to freeze these funds, and that stablecoin issuers are compelled to act proactively, not just after the horse is out of the barn?
Absolutely, yes, sir. And to a certain extent, I think that they already are obligated to do that. Sanctions carry strict liability, and AML programs require a reasonable program to detect and prevent money laundering through their systems. But those things need to be enforced, need to be clearly articulated and implemented.
Okay, I'm about out of time, but I just want to say to the whole committee, stablecoins, A, have to be stable, B, have to be structured not in ways that would destabilize the global financial system, and C, should not provide a backdoor to money laundering. And I hope that any legislation stays true to those three principles. Yield back.
Gentlemen,